This video is brought to you by Skillshare. Skillshare has 30,000 classes for you to level up your design business, video, social media, or whatever skills you like. Or if you don't have any skills, you can take them from nothing to something, so that's good too. Me, I've taken video production courses. I even took a course on how to go viral, which I was pretty damn skeptical about, but it's actually legit. Lately, I've been on a bit of a productivity binge as I want to squeeze out as much as possible from my day. It's a great course by a chap called Thomas Frank, also a YouTuber by the way, on getting more stuff done in a day. It's great stuff, worth checking out if you want to get more done in a day. But yeah, Skillshare, just do it, you'll like it. It's also free for 2 months, and if you don't like it, no big deal, just cancel it. Easy. It's just $10 a month after that if you want to continue, but no pressure. Support VisualPolitik by supporting Skillshare. It's a good thing to do. Link below with that 2-month trial for the first 500 people who click. For more than 100 years, the automotive sector has been one of the most important industries in the world. For decades, it has meant strength, wealth, and industrial power. Companies like General Motors, Volkswagen, or Toyota were largely responsible for spreading the tentacles of the great industrial powers around the world. Folks, we are talking about some amazing numbers.
Audi 80, die neue Sicherheitsleistung. Bremsung. Das neue lenkstabile Bremssystem hält den Audi 80 spursicher in der Bahn. Audi 80. Die neue Leistungsklasse.
Every year, nearly 100 million vehicles are sold worldwide. The industry employs tens of millions of workers. Every year, these companies invest about $100 billion into R&D. It may be hard to believe, but companies like Volkswagen, Daimler, or Toyota invest in research and development almost as much as some of the best-known companies in Silicon Valley. Check this out. In fact, with more than $15 billion, the German group Volkswagen is none other than the third company in the world that allocates the most resources each year to investment and development. It stands just behind Amazon and Alphabet. However, folks, just hold on a second here, because the automotive industry isn't going through one of its best moments, at least where popularity is concerned. In the last 2 years, many questions have arisen, so many that recently it has led to this main question. Are we seeing the decline of the automobile industry as we know it today? Could this sector's good years finally be over? But now, do you want to know exactly what we're talking about? Well, listen up.
Giants with mud feet?
Lately, car manufacturers are being criticized constantly. There's constant talk of the electric car, the autonomous car sharing, trend changes, changes in habits amongst the youngest, or simply a world of megacities where cars would supposedly become obsolete, at least private cars. All this is fueling the peak car concept, according to which the automotive industry would be on the verge of reaching its historical sales maximum if it hasn't already reached it. This means that from now on, or at least shortly, we're going to be seeing fewer cars being sold each year, not more cars, fewer cars.
When you put all these trends together, you're going to see a cap on personal vehicle ownership start to emerge. We are near peak car. Mike Ramsey, an automotive consultant with researcher Gartner Inc.
As if this weren't enough, governments and the growing social conscience are exerting increasing pressure so that manufacturers produce more environmentally friendly cars. And this is all very good, but it does present a slight inconvenience for producers. Developing an entire technology and adapting all processes to it costs a fortune.
Volkswagen said it will spend 44 billion euros on electric cars, digitalization, autonomous driving, and new mobility services by 2023. German automakers will spend 45 billion on electric vehicles over the next 3 years.
But we could of course think, well sure, so what, in the end, they're still going to be rich from car sales, and that's precisely where the peak car concept comes into play. Allow me to explain. If costs grow as a result of the new technologies that cars have to incorporate and all of the investments that companies have to make, for example, in R&D or adapt their production methods for, and then sales drop, well, it would soon lead to the collapse of these companies' profits. It essentially leads to higher costs and lower income. Not to mention the risks that some will fail in the transition and get kicked out of the market. In other words, we could say, folks, that car manufacturers are facing a kind of perfect storm. A reflection of what all these concerns involve can be found in the automobile companies' stocks, that is, in the price of their shares. In general, these companies are quoted at a price-earnings per share ratio that is much lower than the market average. Of course, given these circumstances, many professional investors won't hesitate to consider them as value traps. They look like cheap stocks, yes, but as their margins and profits are going to drop, well, they really aren't. Now at this point, before continuing, there's a question we need to ask ourselves. Why or how is the peak car concept reached? Well, listen up.
An industry in decline?
Friends, the peak car concept rose from an idea. Technological changes, trends, and the world's increasing urbanization are going to lead to fewer car sales. See, on the one hand, our planet is increasingly becoming a world of cities, especially megacities. The percentage of the world's population that lives in cities won't stop growing. In 2050, 70% of the entire world's population is expected to live in urban areas. And logically, in these spaces, a car can sometimes be more of a nuisance than a solution. For example, traffic pollution. Many large cities have begun to restrict the use of vehicles in urban centers. For example, in Shanghai, Shenzhen, or Beijing, license plates for cars with combustion engines are auctioned. That is, there's an annual limit of new enrollments, and if you want to get one, you have to really dig deep into your pocket if you can, and if it's worth it.
Are you listening? Damn.
Then this process is reinforced even more due to the growing environmental concerns that exist in society that have led to new car-sharing formulas and an extension of services such as Uber or Lyft. That way, following the reasoning of the peak car defenders, if the average time of use of the vehicles grows, fewer vehicles will be needed, and if hiring a car can be done comfortably at any time with your mobile phone, well, you wouldn't be as motivated to buy one. Why spend money on a car that will spend most of its time in a garage? And that's not even getting into talking about when autonomous cars arrive. The result, well, among other things, there will be fewer car sales. And not only that. Meanwhile, as the costs for motor companies increase, and predictably so does the competition, for example from China, these firms are also facing threats from companies like Google or Microsoft who might be delving into the business. For the prospects of the industry's giants currently, these aren't exactly good things. Folks, these are the reasons why the big car companies are not in style. However, let's pause for a moment before condemning the entire industry. Let's ask ourselves a question. What if things weren't so bad? Can we find some signs that suggest that the golden years of the powerful automobile industry have not ended yet? Well, folks, yes, we can. So listen up.
What is to come?
China moved from the bicycle to the car in just 20 years. In 1994, the typical images of the country included streets crowded with bicycles. To give you an idea, in 1985 there were fewer cars throughout China than in London. And to top it all, almost all of those cars were from the government. Less than 3% of the country's passenger cars were privately owned. However, from 1994, everything changed. In just 15 years, China surpassed even the United States as the world's largest automobile market. And do you know how many cars are currently sold in China each year? No less than 28 million, 11 million more than in the United States. To give you an idea of what this entails, General Motors itself, one of the great icons of the American industry, today sells more cars in China than it does in the United States. The evolution, folks, was spectacular, and there was a reason. This is the enormous growth of the Chinese middle class, of which we've already talked about here on VisualPolitik. However, despite all of this growth, the rate of cars in China is still very low. It's less than 5 times that of the United States. In other words, there's still a lot of room to grow. But okay, so you might be thinking, but I mean, Simon, now with the changes we've seen, the Chinese won't need as many cars, right? And also in many of its cities, they're kind of just annoying. Well, the answer there is yes and also no. We tend to forget it, but the Chinese middle class and the family's purchasing power continues to grow very strongly, and even though the percentage may be somewhat lower than in the past, families still want to have their own car. And if they have the money, they might even get an Audi, a BMW, or a Mercedes. Folks, it'd be a good idea to take a look at Japan's experience here. See, Japan has one of the largest urban populations on the planet. 94% of Japanese live in urban areas, and the country also has the world's most populated city, Tokyo, with 38 million people living in its metropolitan area. Well, despite this, the aging population and having public transport systems that are among the best in the world, the rate of vehicles per capita is not only 4 times higher than in China, but new car sales remain stable. In other words, if we talk about probabilities, I think we can expect the Chinese market to continue to rise for quite some time. But the good news, it doesn't end here. In the United States, sales are at record levels, even if a vehicle's average age has risen to a stunning and record-breaking number of 12 years. That said, if we consider that the US economy has full employment, wages are growing, and the way of life hasn't changed, and cities haven't changed, it doesn't seem probable that sales will fall permanently, wouldn't you think? Because together, China and the United States, with nearly 50 million cars sold each year, account for more than 50% of worldwide sales.
Right now, everyone still hopes to sell more cars. I haven't come across a single company that forecasts a decline. Philip Kampshoff, a McKinsey partner who specializes in transportation.
But that's not all. The big manufacturers could still receive some great news, and that's India. India's a country with more than 1.3 billion inhabitants that, even though it's lagged behind China, is now beginning to wake up. The Indian government is building more than 20,000 kilometers of new roads in the country, where the vehicle ownership rate is very low. Little by little, that is beginning to change. In 2018, vehicle sales in India grew by almost 9% to 3.27 million vehicles, overtaking the United Kingdom as the 5th largest market in the world. By the way, the company that sells the most cars in India is actually Japanese. Suzuki controls almost 50% of the Indian market. However, folks, that's nothing. Just to reach China's vehicle rate, India would have to sell more than 100 million cars. And the strange thing wouldn't be to think that it will happen, but that it won't. Due to status, freedom, or comfort, families, when they can afford it, want to have their own car. Just 20 years ago, we would have never thought that China would sell more than 28 million cars a year. Of course, behind India, there's also Vietnam, Indonesia, and many African countries. So when people say that fewer cars will be sold, I don't really necessarily think that that's gonna be the case. And regarding carpooling services, at the moment the data tells us that what they do is increase the number of kilometers traveled, not decrease them. That is, they make people use cars more as a means of transportation. Yes, Uber's cars, or those from different car-sharing platforms, move for more time, but they also cover more kilometers, so their average life is lower than that of private vehicles. In addition, car companies themselves have delved strongly into the car-sharing market in cities. They see a potentially huge business and a new source of income.
Daimler and BMW plan $1.1 billion Uber battle. Daimler and BMW are pouring more than 1 billion euros into their joint car-sharing and ride-hailing businesses to take on the likes of Uber and Lyft. The German venture is estimated to become the world's largest car-sharing operator.
But alright, at this point, you might have some concerns. You might be thinking, well, Simon, what will happen to the environment? Is this all really that sustainable? Well, sorry, but the question shouldn't be whether it's sustainable or not, but rather how we're going to achieve sustainability, either with more efficient engines, electric vehicles, or maybe even hydrogen cars. For example, along this line, in just 5 or 6 years, the Chinese government wants more than 6 million electric cars to be sold in the country each year. Cars that, by the way, aren't subject to limitations in large cities. That explains news like this.
Tesla plant key to Musk's future ambitions takes shape in China. 3 months after groundbreaking, Tesla is rushing to complete its multi-billion-dollar factory on the outskirts of Shanghai to capitalize on growing demand in the world's largest electric car market.
Anyway, now you probably see the automobile market will change a lot in the coming years, but thinking that car sales will fall year after year, well, only time will tell, but beyond short-term situations, it isn't clear whether the automotive industry's best times are behind them. So I really hope you enjoyed this video. Please do hit that like button if you did, and don't forget to subscribe for brand new videos. Also, please do check out Skillshare. They made this episode possible. There is a link to them below, and as always, thank you for watching.